Welcome back, my friend. Here we go again. It is your best friend in stocks, options, and dividends. It is the abominable dough man. Really? The abominable dough man. And this is the wealth snowball. So I wanted to check in here and take a look at the trades that we made week ending February 3rd. So yesterday, I'm recording this on Saturday, but you won't see it until tomorrow, Sunday. So Friday was February 3rd, so week ending February 3rd. Here are the trades we made for the week. Monday was a big day. We traded how many contracts on Monday? 24 contracts. So that would represent 2,400 shares of stocks. And you could see it was Put City on Monday. Put City around here because the market was down. And we were looking at these different positions. For instance, here's Devon Energy. That's one of my sweethearts. They pay a nice, healthy dividend. So I was looking at Devon, entered 9 contracts, 900 share position, all of which will be expiring this coming Friday. And if you can see why the stock price or the strike price right here of 59, that was a reasonable and conservative number on Monday, January 30th. But as you can look at today, where are we? Here's some Devon. It ended Friday at $60.85. So on a put, basically what happens is I am obligated to buy 100 shares per contract that I entered. So we've got 900 shares potential coming up for me. And, as far as the risk of option trading is concerned, the share price can go down to 57, but I still am obligated to buy at $59 a share. So that is the big risk involved with the stock options trading. But I have confidence in my friend Devon Energy, and I think that they'll end next week above 59. So all of these contracts will expire what they call worthless, which they're very valuable to me, though, because all that premium right here will just be in my pocket. So on Monday, we had the 24 contracts. Here's all the trades we made. Devon Energy, 3M, and the Google right there for a total capital on the line, collateral of $206,500, and we collected a premium of $822. So again, when you're looking at the options, we're down here on Devon. If I want to do this $59 put, so right here we're selling a put, okay, which means we have the obligation to buy at whatever strike price we end up entering the contract at. So you see our 3 positions right there in Robinhood, and then I have 3 positions in Vanguard, 3 positions in another brokerage account, for a total of 9 on the same strike price of 59, which looked like a very conservative strike price on last Monday. But now, as you can see, not so conservative, but guess what? We don't mind owning Devon Energy, even owning it long term because of their +8 on the old dividend. Let's go over to Yahoo Finance, look up Devon Energy, and take a look at what we have here. See, we got the forward dividend and yield. So in 1 year, what they would pay us is $5.40 a share. So if we had those 900 shares only, 900 shares, and we just kept those shares through the year, it would pay us $4,860 in dividends alone. That's cash in our pocket, right, Bart? That's true. That's an 8.73% yield. So we got that going for us. And according to the folks over at the Yahoo Finance, they feel that this asset is undervalued. And so does our friends over at Alpha Spread, which currently shows the base case intrinsic value of Devon Energy at $117.27 a share. Hello. So we do want to end up owning this. And if we get put shares at $59 per, then you know what? We'll just take it. And then what we'll do is we'll sell conservative covered calls on those shares that we own because we want to retain them. And we also want to collect the dividend, which I think Devon paid me in December. So let's take a look. So that probably means, so Devon also likes to pay some additional dividends, some special dividends. If we look here, see, this number is actually inaccurate. That was based on a special divvy. If you look at dividend history over on Seeking Alpha, and we look at Devon Energy, when do they pay their beginning year dividend? And that's going to be in March. So we're going to be looking for that declare date where they're going to tell us what their dividend is going to be. Okay. And then also when the X dividend date is, which means you need to own shares the business day prior to this date. So if 3/11 falls on a Monday, then you need to own that asset on no later than Monday in order to qualify for this dividend that's going to be paid out. So we'll be looking for that, get some more Devon Energy in the pockets of the wealth snowball. 3M, it's not necessarily a company that I want to own a lot of right now because they do have legal trouble that they're facing with their faulty earplugs that the military suffered through and had tens of thousands of cases of some hearing damage there. So that's on the record books, isn't it? It is. We got to be careful there. But 3M is a long time dividend payer. And I was thinking if I can get in at $108 a share and even $106 a share, then why not? Because let's take a look at 3M. And this will show us that our odds of getting in at those strike prices is probably still pretty low right now. As you see right here, $117.49 a share. And they're also a fan favorite of mine because they pay this beautiful dividend right here, 5.14% dividend yield. So we like the sound of that, but we're not necessarily looking to get in at sticker price here. If we can get some value in on the 3M, then we're going to do so. And if we get that at $106, $108, we'll take that. And then again, we'll begin selling conservative covered calls on 3M and then just collecting the dividend as we go. Let's take a look at 3M over at Seeking Alpha and see what the chaps over at there say. So all of them here, so the Seeking Alpha authors all believe that the stock is a hold right now. Wall Street believes it's a hold, and those beep, boop, boop, R2D2, those robots, those AI folks out there that run all the algorithms, they believe it's a hold as well. So there we have that. And if we look at the dividend history, you can see that 3M has paid dividends for 64 years. And in all of those 64 years, they have also had dividend growth, which means they raise their dividends. So if we look at right here, the amount of that dividend, 2022 was $1.49 per quarter per share, $1.48 in 2021, 47, 44, 36. So you can see the dividend growth over time, and you see it's been substantial through here, which is nice to track, because if you're holding this stock and you are an income investor, as I consider myself to be, because I like that cash flow. One of my money rules in life is that cash flow is king, cash is queen, and debt is the debt is the joker. So I like to look at the divvies. I like to collect the divvies. I also enjoy the premium. So if I can do both, and that's what I'm working on, that's why I wanted to create this channel for you and I. You and I must make a pact for you and I to share this journey together as I look to find myself at about 10,000 a month in passive income from dividends, and I want to get there through both collecting and compounding those dividends, and then also collecting the premium and then getting into more positions on these dividend stocks. Google, hey Bart, Google doesn't pay a dividend. No, they don't. But with options, you can essentially force these companies to pay you a dividend because you can just trade the puts and the calls and then collect your premium. And then based on how much assets you have involved, whether you're owning the stock or have collateral up on the puts, then that basically becomes your premium because you can calculate that number. And it's pretty fun when you look at it in that regard. I like Google a lot as a company, and I think they've been fairly undervalued recently. And you can see where my strike price is very conservative here at $89. And I think you watched me roll a couple of those But if we look at Google right now, I know it was down yesterday because they had a disappointing earnings call. So this is 1 week on the Googler. So yesterday, Google did indeed end up down $3.59 a share, 3.3%. And then for the week, though, they were up 6.5%, and then over 18% over the last 30 days. So look at that meteoric rise. But I was messing around with the Googler right through here. I even owned several hundred shares, and then I played it. I didn't play it conservative enough, and those shares were called away for a nice little profit. But I'd rather hold those shares through this type of growth. So that's the other downside to selling covered calls and working with the options is when you have these runners and you have a non-conservative, because I think I was buying these, I was getting in on Google in the 86, 87, 88 range, and then I think they were called away at like 90, 91, which that was $100, $200 a contract profit, but I still would have liked to keep them and trade continuously on the covered calls. So we'll be looking at the Googler. We have some positions still that we'd like to get in on the low end of that asset, but we did end up with $822 in premium on Monday. Tuesday, which was January 31st, we liked McDonald's because, as we talked about in a previous video, McDonald's and Caterpillar on the same day reported earnings, and both of them went down. And I thought, hey, I like English muffins. I like a McMuffin with an egg and sausages and cheese. Don't eat them that much. But I know a lot of fat people do. There you go again. That's so rude. Oh, as I said, as long as there's fat people, Pepsi and McDonald's going to be great plays. So we look at McDonald's here at the puts 22.57.5. I'll take those stocks at that number, even though I think our friends over at Alpha Spread still believe that those numbers would be inflated. So let's take a look at Mickey D's real quick here. I like Alpha Spread a lot. They do all the hard work, like, beep, boop, boop, bring out the abacus, carry the one. A lot of the things that I don't understand or really want to spend time on. I just like reading this stuff, looking at it. But they do great with their intrinsic value. And you see they're claiming that McDonald's is overvalued by 33%, possibly 41%. Best case would be right here at 239.79. And we look at where we were looking to get in on McDonald's. But as you know, those positions expired out of the money, and these premiums were put into our pockets. So $418 collected on Tuesday, January 31st. We did have one iron condor, my very first iron condor of my life. So we'll explain that in a future video. Essentially, what you do is you sell a call and then you buy a call at a different strike price. So say like in this position, you're at 300 and 305, and then you're at 405 and 400, on both sides, the puts and the calls. Everything in between is what we think the fluctuation could possibly be. That's where you want it to end. Well, Adobe's turning against me because it has been raking lately. Let's look at Adobe and see, how it's got me nervous on the Iron Condor because, well, they're only at 379 and we're good at 400 to 405 on our Iron Condor. We collected $160, but we have an expiration of 317. So we'll be keeping an eye on that. And we did how many contracts? We did 6 contracts on Tuesday for a total of $126,250 in collateral moving into the first day of February. Ciao. February right here. We went in for some Southwest, Devon Energy, Googler again, IBM, Blackstone, which is one of our darlings. I mean, we made the same mistake though with Blackstone as we did Google. I was owning Blackstone in like mid 70s all the way up to 80. And then I thought I was being conservative at like $88 a share and on my covered calls, and the market blew through that. Those all those shares were taken away. Where did you go, Blackstone? I love you with your dividend. Because Blackstone had a lot of I don't know, I think it was overblown press about the withdrawal limits of some of um, their different private equity funds, and because of that, it went down unfairly, and I was going in on it. So we did collect a bunch of premium on Blackstone over the last 2 months, and then made a tidy little profit on our call or our shares being called away. But we still got some. Let's see. So this position, I don't know if we rolled that or if it expired, but it was at 87, as you see there, and then super conservative down here at 85, and that expires on February 10th. So that'll be, close to worthless soon, which means we'll have collected almost all of our $34 premium unless Blackstone, for some reason, goes down next week, which I do not foresee. And then Caterpillar, same move again as we did, and we are really conservative here, 237.50 on 3 contracts. So it's a lot of collateral that we have in there, but I don't see Caterpillar plunging this low where we're going to be put those shares. Let's take a quick look at the Caterpillar. As you can see, they're 247, so they're still $10 away from that strike price. I think they've leveled out. Let's look at their 5-day. Geronimo, look up below. So you see that's where they had the unfavorable earnings report according to the street, and then I don't want to say they've been necessarily sideways because they blipped down again here, but then out of this gully came back up here where they've been hanging out. They went down a little bit some more, but up on Friday to 247.76. It's just too good of a company in this environment, because I still think so many stocks are overpriced and overinflated. But at 237.50, we might still say, hey, we're in on that. So we collected 108 in the premium right there, a total of 459 on February 1st. And February 2nd, we went with our friend Walgreens Boots Alliance. I know what Walgreens does. I try to understand what these companies do that I am selling options and investing in, and they're paying me dividends. I do understand what Walgreens does and what 3M does. And Unfisa, we had the Unfisa. This was actually, that's not a great position right now. 46, 2 months ago, that was a great price. Right now, the stock is trading under that number. Let's take a look over at Unfisa and see where they're at. It's like 44 and change, I believe. 44.06. Hello. And over at Seeking Alpha, the authors there say that's a buy, and Wall Street says it's a buy. And then R2D2, those AI robots say, hey, just hold that right now. But what we know is their valuation is an A. Their growth is an F. You get an F, Unfisa. But their profitability is, hello, we like profits because profits pay us dividends, and they like to pay us dividends. 3.72 on the divvy yield right there. And then look at this. We've even got some nice growth, 5.51%, 12 years of growth. We look at their history, and I know I got some big Pfizer checks coming soon. Did they pay me yet? I don't think so. But if we look at their history right here, we've got 12 consecutive years of dividend growth for Unfisa, and then the sector median is 2 years. And then look at that, 33 consecutive years of making those dividend payments. So I feel pretty confident in them cutting me checks every quarter. So I look for that to continue. So 4406, I think that's a good number. But as I'll say in every video, this is not advice. This is not investment advice. If you take investment advice from me, you need psychological advice to try to figure out, hey, what are you even doing? So this will probably roll because we do own, I think, 1,200 shares of Pfizer. Let me look. No, we own 1,200. No, we own 2,200 shares of Pfizer in various accounts. And right now, I'd like to roll that number to more conservative. So, and wait a minute, we already rolled it. Come on, Bart. So we actually, this was at like 47, and we rolled it out to 46 to March 24th. Yep, that's what we did. That's why that premium is so low right there. So we'll be keeping an eye on that because I anticipate it will be worth more than $46 by this date. but we'll see. So we'll keep an eye on that. So we did $235 on February 2nd with $122,650 in the collateral. And then yesterday, you saw those trades we were making together. We ended up with $59,500 in collateral. And we had how many contracts on Friday? We had 7. And then, as you see here, the total for the week 77 contracts. Here's our expiration dates, okay? And this is the premium on Friday. So for the week, we collected $2,145 in premium. So in the next video, I want to share with you all of the contracts that did expire for us on February 3rd and how they looked, how they did. They were like so many puts involved in that, but that's what the market dictated for us. We were sitting on some cash, so we put some money to work in those puts, while it also accrued 4% interest in our money market account. So you can't go wrong with that. Thank you so much for watching. I appreciate you tuning in. Do me a huge favor. Subscribe to the channel, click on the notification bell, share this with as many friends as you possibly can, as long as they're real lovable people, real sweethearts. Leave a comment for me, and until next time, have a great day, my friend.